Thanks, Adinda. I'll start the webinar. Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So welcome to the new week. And this week is from 20th today till 24th of October. And today on 20th of October, I'm presenting the Asian session live market analysis between 5 and 5:30 GMT. So during this, I will give the derived forecast for this week and also the levels in which the currencies are expected to make swings. And also we will fine tune the market forecast using the market trading technique and briefly touch upon the trading strategies also. So last week you would have noticed that Euro and GBP gained the levels and lost the levels, and they have been doing that sort of moves either way opens for almost all the days. So finally you come across that people might say that they are making sideways moves. So normally when such moves happen in the market, then the people become uncertain whether the market is expected to go up or come down. So in that process, the analyst might derive the so-called resistance, and once the resistance is breached, then the market might go up, or the so-called support. Once the support is breached, then the market might come down. So that sort of analysis or that sort of projections the analyst are expected to give. And the players here, they have to necessarily earn money from that other market for their huge investments. So they will try to make the moves in such a way that they hit the stops on either side and also create the bearish field under the bullish field alternatively. Why I'm telling this? Because they have done for the past few weeks in this month either way stop ends, and they just made the downward move quickly and accumulated the buy positions and gained the levels and booked profit. And then again they started making the slide. And that last week they made the drop in the case of GBP holding euro, and now if we see GBP they are holding and euro they have started making the slide. So in order to handle the European crosses, they will try to hold the GBP and make lesser drop and make more drop in the case of euro. And probably they can give any sort of attribute for that with regard to the uncertainties in Europe or this speech from that of the ECB president, etc. They can use it as some sort of excuse and then try to make more drop in the case of euro, so that euro GBP cross they will be able to bring it down. So euro GBP cross they made the one-sided rise about 150 pips last week, and this week they are expected to make a drop in euro GBP and also handle aggressively the European crosses, that is euro CHF and also that GBP CHF. So GBP CHF, when they are holding GBP and gain more levels in the case of CHF, while dropping euro, will find GBP CHF will have one-sided gain. And last week you would have noticed that they made a very big drop in the case of yen, and the yen crosses to accumulate around 105. And then they gained the levels to 107. And that after handling the European crosses and making profit booking moves, they will again come back to that of the commodity crosses. And then the commodity pairs, then yen crosses, then the majors, and the European crosses. That sort of cycle they are expected to make till end of this month, because they wanted to book as much profit as possible and accumulate again at the lower level the buy positions, so that their buy levels will be much lower than that of the market level. And when the volume comes down, then invariably this sort of churning, they have to do it for at least several days. So it appears that they wanted to take the entire month of October to do this before making the rise for another 5 months, that is November, December, and January, February, and also early part of March. They will try to gain the levels considerably in the case of Euro and GBP. So for that, they are trying to accumulate. So why they are gaining the levels? After accumulating the positions and booking profit and bringing down their buy value to the lowest level to the season. And then later on, when they gain the levels, their intention is to book profit, but they will create the bullish feel in the market so that all traders will come and buy it freely at the higher levels using technical analysis and thinking that they are doing the breakout trades effectively, etc. And the players will be the happy sellers once they gain the levels. So this is what they are trying to do it at the moment. So let us see the forecast for this week. So these are all the 5 days of this week and what they are trying to do. So during the third week of October, again, we'll come across the week beginning false move followed by that of either way stop and moves. So the false move will be on the upside, firming up during that of the Japanese and the European session, and then create the feel that the market might go up, and then start making the slide. Then once it start making the slide, people will think that market is going to drop. Then they will start rising the market. This is what we'll be seeing. And also the next week, that will be 27th to 31st of October, and that will be the last week of the month of October. And you know that during the last week and the first week of the month, they make the either ways. So they make the volatile moves. So this time they are expected to make deep either way stoppments. That means they will make one stoppment and then continue the stoppment on the upside and then start making the slide and make further drop as a stoppment. And people will think that it is over, then they will make one more downward stoppment and then reverse. That sort of moves they are expected to make so that the traders thinking that the market is going to have a strong support around that of the support or strong resistance around that of the resistance might be easily duped, and the such traders who keep their stops above that of the resistance and below that of the supports, and their stops are going to be hit. And that is what the players are expected to do in this week and the next week, and then try to earn as much as possible from that of the losing traders. So keep in mind that either way stoppings they are expected to make. So you can do the session-wise trade, and if you use the hedging, then you will be able to easily make either way trades in the market. And so that when they rise, book profit on the buy side, when they drop, book profit on the sell side, and earn during either way moves of the market. They are not expected to make one-sided upward move or one-sided downward move for another 2 weeks. With regard to the levels, again, you'll come across the same range they are going to make use of and try to make the moves. And people might say that market is under the consolidation and directionless. So it might appear for the analyst the market is directionless, and we know very well the players are doing lower level consolidation with a frequent downward stop and before making a big upward rise. So they will try to drop the market from that of 1.2750 area in the case of euro to that of 1.25 again. This week we'll come across more drop in the case of euro. After watching it, then you will be able to really understand how systematically the players are doing it and we fail to understand. So because we use different type of methods to read their intentions without following it directly, and then the uncertainty comes, then invariably you find that every time the uncertainty prevails in the mind of the analyst, and they tend to give, if it breaches the resistance, it can go up, or breaches the support, it can come down. That sort of either way calls are given at every given moment in a market. So it is become more of a fearful game, and the analysts become afraid, and then subsequently they induce the fear to that of the traders whenever the quick moves happen in the market, and everybody become jittery and uncertain and emotional. So the players are able to achieve their objective of earning money from such emotional traders. Now, in the case of GBP again, they will come back to that of 1.5850 or 1.58 level, and then quickly reverse it and gain first GBP and afterwards gain euro levels. And in the case of yen, they are expected to make a consolidation again around 105.50 to 107.50 range. And in the case of CHF, they are expected to make the range moves from 0.94 to 9650 area. And Canadian dollar, they are expected to come down to that of 1.11 level and then go up to that of 1.13. They already come closer to that of 1.13, and they're expected to make a quick downward move along with that of euro. When euro is making a downward move, they are expected to make the Canadian dollar to come down. So what happens? Euro CAD comes down drastically during the process. So this is how they handle the commodity process later on. Then Australian dollar, 86.50 to 88.50, they are expected to make the range bound moves in this way. So till next week, we'll come across the range bound moves happening in the market. Probably they may gain another 50 pips or drop another 50 pips. That sort of moves, they will do it, but it'll be range bound. So it is a lower level consolidation with downward stop, and lower level consolidation with downward stop. And because of the volume is low, they are trying to accumulate more and more positions during every churning process, during the cyclical process. Why? Because they just buy a lesser quantity, whatever available in the market, and then gain the level book profit, again drop it, and then buy lesser quantity. Instead of doing it for 2 times, they are doing it for 7 to 8 times this time to get the desired volume of buy positions at the lower level with the added profit. Then coming to the of the market reading, so these are all the initial lows and the highs. They are set around 3:30 GMT, and euro formed the low 1.2737, 1.2768 is the high, but here it's showing 1.2836, that is Friday high. Then in the case of GBP, 1.6083 is the low, 1.6113 is the high. They are not breached the high of the low in euro and GBP. And also in the case of yen, they just breached the high by 2 pips, and the low is intact. And in the case of CHF, the low and the high are not breached, and Canadian dollar, the low and the high are not breached. Australian dollar, also low and high are not breached, excepting USD yen, wherein they increased the spread almost closer to 40 pips. And also in the case of Australian dollar, you find 40 pips spread between the high and the low. And other currencies, you find it is of lesser nature. So they are simply consolidating during that of the Japanese session, and they could make a small upward stop, and they had done the stop and then started making the slide already. They did not sustain above that of 107.38. So they will try to make a downward move. So as you know that last week, they just made the drop in the case of yen crosses and then subsequently gained the levels. Similarly, this time also they are expected to make that sort of moves. You make lower level consolidation with the downward stop in the case of yen crosses. And in the case of commodity crosses, high-level consolidation with upward stop and to continue the draw. So that sort of moves they are expected to make during this particular week. So try to do swing trades. Don't aim off position trades. So you can do every session. Watch during start of the session, 30 minutes from the start of the session. And if they are near the high, take a sell position and keep the 30 pips hedge out. It will limit the risk. And once the position makes profit, keep stop at entry and remove the hedge order. And thereby the hedge acts as a stop in your trading strategy. And then subsequently, once the market shows profit in your sell position, you can you can trail the stop, maintaining a distance of 15 pips from the other market, and so that once the stop is there at entry and also to protect some minimal profit, then you eliminate the risk in trading to start with. Then exit or take profit can be at 45 pips away from the other market or 75 pips away from your entry. It depends upon the momentum what they are showing. If they just show more than 40 pips spread, then you can aim for 75 pips. If it is less than that, probably you should be able to close it with 30 or 45 pips profit. So that way you can use the trading strategy. Now, this is the last week wherein we'll come across the session timings as follows. And from next week onwards, you'll find the Europe will switch off the daylight saving system. So as a result, you will find the normal time, which starts by 8 GMT. So 30 minutes later, the European session will start, but US will continue to hold it next week, the daylight saving system. So you will find as a result, European session timing will get reduced. And Japanese session is not altered, but once this 30 minutes is given to the Japanese session, so Japanese session will be from 0030 to 7:30 GMT, then 7:30 to 8 will be the gap time, then 8 to 13 will be the European session. So next week, Monday, I'll show you the timings to be followed during the next week, and followed by that, I will show you the winter timing, GMT timing, what you have to follow in subsequent month till March. So if you've got any question, you can ask me the questions. I'll be willing to answer to those questions. And I may not be able to present on 23rd the follow-up webinar here. And so I'll come back on 27th and give the webinar next Monday for the forecast for the next week. That will be the last week of the month of October. So if you've got any questions, kindly ask. Okay. Then Grigor has got a question. Does drop in USD in months ahead mean equity should rise to new high until March? See, as far as the equity market is concerned, they will be doing the high-level consolidation with the upward stop in order to make a drop. And the players are gaining the levels in the case of equity market to book profit. So we are holding it. Every good rise, quick rise, book profit, and re-enter with a lesser quantity and book profit. And always use the stop when you are doing high-level buys in the case of stock market. Because suddenly they might make the drop and you may not be able to withstand. And another important aspect with regard to stock market is, so they pick up a handful of stocks, about say 10 stocks which are indexed stocks, and then rig those stocks to gain the levels in the index, create the bullish feel, and afterwards they book profit after the certain amount of gain. And then later on, they continue to make the drop in all those stocks. But many of the people might get struck with such stocks at the higher level and think that, okay, the next rise, we'll be able to book profit. But the players are very clever and they leave all those 10 stocks they don't pick them up again, take another 10 stocks and read them and gain the levels in the index next season. So even if you hold it for 1 or 2 years, your stocks may not come to those levels. This is the trick they play with regard to the stock market, because there they have to have an understanding with the other promoters. It is a different story. So ultimately, they try to see that the traders, even whatever the type of trade decisions they take, like delivery based trading, so that there won't be any loss, etc., they try to give a loss. The best way to trade in stock market is to keep the stop at entry and don't go in for leverage trading, and they give all the leverage to you in order to trap you vulnerably. The broker will ask you to deposit more and more money, otherwise they will simply square off the positions. Then rummies. So to confirm, this will be the last week that the market time remains the same. Yes. From next week, we'll find the change in the market timings. European time will change, and later on, from 3rd of November, the US time will also change. Any other question, please? If you've got any question, you can ask me either in the chat window or in the question answer window. Okay, Ines got a question. May you please explain again the sequential trend reversal? Okay. See, the sequential trend reversal is very important for you to follow, because if you understand the sequence, which currency they are going to handle it later on, you'll be able to understand, so that you can participate in those currencies rather than simply everyday trading in euro. So their sequential trend reversal is as follows. First of all, they will handle the commodity crosses. That is USD CAD and Australian dollar crosses. That is Euro CAD, GBP CAD, or Euro Australian dollar, then GBP Australian dollar. And this sort of thing they will trade. And also the CAD yen, GBP, Euro yen, GBP yen, and Australian dollar CAD. All those commodity crosses they will handle. Then afterwards, they handle the commodities. That is, make the contrarian moves in the case of the commodities. That is, when Euro and GBP are showing USD gaining move, USD CAD and Australian dollar might be showing USD weakening move. And that sort of moves you will come across. Now you find that Euro is showing the USD gaining move because Euro is making a dip, whereas you find CAD is also making a dip, that is USD weakening move. And also Australian dollar is gaining more, which is the USD weakening move. That sort of contrarian move they will do. So first commodity crosses, then commodity pairs, then afterwards yen crosses. So Euro yen, GBP yen, then CHF yen, all those yen crosses, and Aussie yen, then Canadian dollar yen, like that. They will try to do the yen crosses and yen, some extreme moves. Last week, you would have noticed how suddenly USD yen made the drop to 105.27. For no news, simply they will make such moves and handle the yen crosses, accumulate lower level consolidation with a deep downward stop, and so that in all yen crosses like Euro yen and GBP yen, predominant of the traders simply take the positions in the market following the technicals. They make one extended downward stop and finish. All of them have to close their buy positions, and later on the players accumulate all the sells and gain the levels. But the traders who lost the money after doing buy and sell think that, okay, market is on the downside. They will try to take the sell position in yen crosses, but they will continue to gain the levels upward by making contrarian move, like gaining the level in the case of Euro, gaining the level in the case of USD, and gaining the level in the case of GBP. So many people simply refer to the charts of the Euro yen and GBP yen crosses. But they also need to understand what move they are doing in the majors. Then try to enter into those yen crosses. Sometimes you might find that GBP yen is making very big move, whereas Euro yen is not making that much. And sometimes Euro yen might be making a big move, but not GBP yen, because they handled the Euro and GBP differently in order to handle Euro GBP cross, European crosses. So that you need to understand from that of the major moves, and then you enter into such trades, you will be able to easily book profit. Otherwise, you will simply take the position and ask every analyst whether euro will go up or come down, or the yen crosses will go up or come down, and things like that. And each and every analyst will give a different perception. Some will say it might go up, some will say it will come down. Ultimately, you will get confused. So you have to get the clarity, and by simply looking at that, how exactly they are handling the respective natures. So after handling the yen and yen crosses, they will handle the majors. At that time, they will make USD gaining and the USD weakening moves very clearly without any demarcation, without contrarian move. They will make the USD gaining or USD weakening move. Depends upon the season. Then afterwards, they will handle the European crosses. That is, make the contrarian move like Euro drop and GBP gain. That sort of move, they will try to do it. And similarly, Euro drop, CHF drop. That will be a contrarian move, because the European crosses are basically Euro GBP, then Euro CHF, then GBP CHF. These are all the three pairs. And in those three pairs, they handle in a big way. Most of the time, you find that they handle GBP CHF in a big way, and also Euro GBP in a big way by making contrarian moves. Then finally, after making the volatile moves, in the case of the European crosses, they will come back again to that of the commodity crosses. That is how the cycle will be. Then what about gold and silver? They have made all the downward stop and moves in the case of gold, and they have gained the levels, and they will try to consolidate here with downward stop and upward stop. And alternatively, they will not gain massively in the case of gold and silver for another 2 weeks, and because they wanted to create uncertainty to that of the traders in the stock market, in the commodity market, and also the forex market. Afterwards, they will start making the gaining moves in the case of Euro and GBP, and also USD CHF and USD Yen and USD CAD on the upside. Then Australian dollar will be making the range bound swings along with that of Canadian dollar mostly. And Euro, gold and silver, they are expected to make an upward move. Then Monol, can you show the expected range for the week? I'll show it. I'm just looking for new questions, then I'll show that. So with the players holding yen and the majors at the current level, they intend to drop Euro and GBP. They intend to drop Euro first and followed by the GBP. Then Aditya, based on the sequential move, what are they handling at the moment? They are handling, to start with, they will handle the commodity crosses. You can look into that of the commodity crosses like Euros CAD and GBP CAD. You will be able to understand they will be making the higher level consolidation with the upward stop and before making a drop. So this is forecast for this week from 20th to 24th of October. Then almost similar Wide range swings, either way stop wins they are expected to make during next week also. Next week, followed by that, you will come across the trend reversal being the last week of the month. Then the range in which the currencies are expected to make the moves this week. Is there any other question? Okay, no more questions are asked. So I'll show the last slide. I'll take this opportunity to thank FX Trade for the facilities provided to present the webinar. There's one more question. And coming Thursday, I'll not be able to present the webinar. You should excuse me. And next Monday, 27th of October, I will give the next webinar and give the forecast for the next week. There is one more question for Mimi. At the beginning of the year, you told us that USD CHF was going to rise greatly. Is it possibly for you to explain how you made such calculations? So that involves a lot of calculations. Rather than knowing more about the long-term forecast, you try to follow what I give with caution. Okay, don't blindly follow it. With caution, use the trading strategy. That's what caution means. Use the trading strategy and follow the long-term calls. And so it is a long sequential analysis. So I will not be able to divulge it in the open forum. So thank you one and all. Wish you all very happy trading. And from my side, very happy Diwali for all those who follow Diwali celebrations, the festival of light. Thank you one and all. Wish you all happy trading. Thank you.